Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Let's kick off. So yesterday, Martin Grunberg, who is the head of the FDIC, which is the insurance element of the Fed and the US Treasury that effectively guarantees your deposits in the bank, came out and said that the regional banks need to increase their provisions through debt issuing to protect clients, protect deposit holders, because if the central government or the Fed comes to seize the assets of the banks, they want to make sure there's enough assets there that can be sold off in order to repay those depositors. That is a red flag. I've been saying this over and over again on Driving Markets that the US regional banks are in a terrible state and they are likely to go bust. Minimum bust, bailing out, massive liquidity, printing of money, whatever the Fed solution wants to come up with, the regional banks are in trouble, and you need to be aware of that. Yesterday was another red flag. Remember, the government authorities are behind the curve. The government offices and the institutions are behind the curve. They are not up to speed with where the regional banks are at. However, Driving Markets is, and the regional banks are in serious trouble, and what they're putting in place at the moment, the FDIC, is simply not enough. What's going to have to be needed, what's going to be needed or have to be done as far as regional banks are concerned, is a massive bailout program, and that bailout program could be a takeover by other banks, merger acquisition, or liquidity, which means pushing that printing button in order to elevate these banks and give them huge amounts of cash flow. That will in turn fuel inflation. So be aware of that. I've been saying it over and over again. Elsewhere, the jobs reports came out yesterday, which showed a massive drop in job openings. I've been saying over and over again on Driving Markets that there's going to be a rise in unemployment. Lower openings means less opportunities. Markets reacted well. Why? Simply put it, that they saw that interest rates now are unlikely to rise, or less pressure on the Fed regarding interest rates because of a loosening of the labor market, and therefore the equity market shot up. Short-lived, near-term markets will fall short-term, even though the overall bull market is not yet broken. But near-term, end of August into September, you may see a pullback on equity markets over that particular month, round about anywhere between 5 and 8% pullback on equity markets in the US, Europe, and in the UK. Elsewhere, you've got Bitcoin jumped yesterday because the SEC failed in one of its court cases. It's setting up an ETF fund, and therefore jumped. I said yesterday was very, very quiet, and as soon as I said it was very, very quiet, Bitcoin jumped about 7 or 8% significantly. That's more or less it for now. I'm keeping it short, sweet, to the point. Regional banks is a problem. Markets will come off near term. You can share, subscribe, comment, and share with friends. And Driving Markets, have a good day.